All right, thank you, fellow SPY traders. So let's just see what is going on. All right, so here's our SPY or S&P 500 ETF. We'll notice you're right up the top of the range here, this range we've been in. So you're like right around there. It's kind of hard to see because the Friday's close and open were pretty close. But all right, so anyway, if you trade the S&P 500, and I assume you do, which is why you're listening to me right now, here's something I can advise you on after my 20 some odd years in the institutional world in trading in the institutional world. So let's just go take a quick look at what it is in the SPY. And what we're really talking about is what it is in the S&P 500. The SPY is just an ETF that is designed to track the S&P 500. So if we look at the holdings, and if we look at the sectors, I think that you can get some insight into which way the S&P 500 or the SPY is going to go based on the sectors. Sometimes it's hard to figure out. Sometimes it's easy to figure out. Last couple of weeks, it was kind of easy. Now it's getting kind of confusing a little bit, but let's just go through it, right? So we got tech is 29%, financials, healthcare, communication services, industrials. I think this week, what we got to watch is tech and healthcare. For a couple of weeks, there was financials, but tech and healthcare, and I will show you. I will show you why. So as we saw, the S&P is at the very top of its range here. Now let's look at the tech sector, which is the biggest sector, probably about 30%, and we've jumped up to this level. This is the ETF XLK. This is a spider ETF, which tracks the technology sector. Now, look at this. We got down to a support level. My follower, or not followers, but my students know that, we get to support, or we go in this massive sell-off. We get to a level that was resistance before. There's a good chance there was a support. All right. There tends to be support at resistance levels, support at levels that were resistance before. That's because there's people who sold here and the thing blasts off. So they feel bad. They're like, oh man, why the hell did I sell? If this thing ever gets back to my price level, I'm going to buy it back. So when the sell off happened, it wasn't a coincidence that it happened here. I mean, look at that. Look how precise that is. You don't need to be a chart guru to see that. So again, people sold here. They regret selling. The price goes higher. They say, if it ever gets back to my price, I'm going to buy my shares back. Sure enough, within a point, that's where we found support. All right. One of the reasons why you should subscribe to our community here is because I've been doing this a long time and I teach people how to identify important levels. And it's not that hard. I mean, of course, it takes a little bit of experience, but it's not as hard as it would seem. Wall Street makes trading seem way more complicated than it really is. One is because I guess people want to sell stuff. Two is I guess people don't get it. It's like, look, man, if you could understand supply and demand, you could understand how to trade. Now, check this out, okay? The tech sector is gapped up here. There's a good chance there's going to be some resistance around this level here. We're going to say, 204. Support was at 204. So there are people who bought at 204 who regret doing so when the price goes lower. There's so many people that are like, oh, if it gets back to my price, I'm going to get out at break even if I can. So going forward with the markets this week, here's what we want to watch. Does the tech sector get above this important 204 level? If it does, then we stay on the long side, okay? But if it looks like it's going to start to reverse, well, then we adjust accordingly. We don't guess. I don't know what the hell is going to go on the market this week. Neither do you. No one does. But the market does. And if we could get it, we're going to be able to get a good signal there. How the tech sector reacts around this important price level. The other thing that's going to be important is how does the healthcare sector act? Because healthcare and tech, tech is the biggest sector. Healthcare is the third biggest sector. Now look at this, right? This sector is at resistance. All right. So if the healthcare sector, oh, you know what? I want to show you something. Going back to here, okay, healthcare sector, tech sector, financials are range bound, but the healthcare sector, testing resistance, right around 141. So if you're like out, you're hanging out, you're at a restaurant, you're at a bar, you're watching the ticker tape go by. If you could see that XLV is 141 or so, and XLK is 204 or 205 or so, or whatever, the market's not moving. If you see a sell off, if all of a sudden XLV is like 138, XLK is like, I don't know, 200, then that will tell us the market is starting to move lower. Different sectors are in the driver's seat at different times in the market. Sometimes it's financial, sometimes it's this, sometimes it's that. Sometimes it even goes a little bit more detailed than that. Is it a particular stock in a particular sector? Yeah, sometimes it is. So this is part of learning what trading is. In the market, there are different things are important at different times. And one of the things that makes people that are traders successful is because they know what to focus on. So please make sure you check back. We know healthcare this week, uh, technology this week. I mean, I could just bring up the financial sector here just for the hell of it. Now you see, like this is why I don't think the financial sector is going to talk to us this week. It's neutral. It's range bound. Okay. I don't think much is going to come here. But healthcare and tech are each at important support. If they turn over and go lower, that's going to bring the broader markets down. All right, everyone. Thank you so much. Please make sure you check back in, and I will see you soon, hopefully.